Dear friends, thank you for supporting this channel on Patreon to join our growing family of donors, now 59 patrons strong. And remember, once we reach 100 active patrons, we will start sending out a 1-ounce U.S. Silver Eagle, autographed by your host, Dunnigan Kaiser, to one active supporter each and every month. Thanks for taking a minute to pitch in by going to patreon.com/reluctantpreppers and pledging your support today. Thanks very much.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We're delighted to have this returning guest. Lynette Zang is the Chief Market Analyst at ITM Trading. She's here with us again to answer your viewer questions that you've submitted, and there's so many. Lynette, thank you for joining us here again on Reluctant Preppers.
As always, it is my pleasure, Dunnigan. Happy to be here.
Well, we're glad for your presence, and before we get into several viewers' questions, and I'm going to have to be very selective because so many have been submitted, I was hoping you could follow up on a recent article that you've written about interfund lending. If you could talk to us about what you're seeing there and what it might mean that people need to be aware of.
Yes, I'm happy to talk about this because it is something that was basically illegal in the Securities Act of 1940, but magically it has subsequently become legal. And in fact, Fidelity created the first overview of interfund lending back in 1990. But I've known about this for quite some time. And in 2016, through the SEC, so Megan, we can send the link to that so your viewers can go in and take a look and see if something that they're invested in. I have to do that because I don't really think of those gambles as an investment, but most people do. Invested in if their fund family is participating in this. And what it is, what interfund lending is. Now, in 2016, between 1990 and 2016, there were 15 different fund families that were approved for interfund lending. But when I went in there just the other day, from 2016 to today, that had grown to 45 fund families that are now approved through the SEC to lend amongst their own family of funds. So for example, you think that you are being super conservative and very, very safe because you have put your money in, let's say, a short-term government money market fund, which in that realm is probably the safest thing that you can do. But since this fund, if it's Fidelity or Vanguard, I mean, there are 45 fund families that have been approved. They could have a triple leveraged, all derivative fund, and if there's a run on that fund, they can borrow from that money market fund. So even though your perception is that you're in the safest thing that you can do, the bottom line reality of it is that any fund is only as safe as the riskiest fund in that family if they have been approved for interfund lending. This is a huge example of risk transfer because they weren't allowed to do that in fact, it was illegal in the Investment Company Act of 1940. But they did put in that act that the SEC could make exceptions to that rule. Funny that Fidelity was the first one to actually even develop the program and then utilize it. More funny that nobody really started to utilize it other than Fidelity until 2008. And now you've got a full 45 fund families, and every fund in those families, every mutual fund, every ETF, every variable annuity is subject to this interfund lending. I don't care if they say this is guaranteed. If the money is not there, you will not get it. And it's going in. This next crisis, there's absolutely no doubt whatever wealth is held in the system is going to be sucked into Wall Street's black hole. It really is that simple.
You're prodding some wounds on my body, because we're back in our viewers, and I think I mentioned this before, but I'll do it for those who may be seeing this for the first time, that back in after the 2008 collapse, we were told by our brokerage, TD Ameritrade, that we could not access funds that were in what's called the reserve account. Reserve was a money market fund. It was supposed to provide one-day access. It was supposed to be a dollar equivalent fund for money market to get better interest rates than you can get on an FDIC insured account. And they told us that no, that it turned out, and we found out after the fact, that the reserve fund had been investing in Lehman Brothers securities and Lehman Brothers family of funds, and that when those were collaterally damaged by the 2008 collapse, then our fund got locked up. And it's like, wait a minute, we were in this money market equivalent, cash equivalent, one-day access. It's like, nope, what's going on behind the curtain on the back end was more leveraged, more risky, more derivative based, and something that we never chose to participate in. But it didn't matter, because we were participating in that fund, and that fund was doing whatever it wanted with our funds, and we weren't able to get them back. So,
exactly. Because it is a mutual fund, and they changed all of the laws around money market funds based upon that particular fund, that its net asset value went below that dollar.
Yep. In fact, it never got it back. They gave us half the money back, and they gave us another 20%, another 20%, and we've still not. And every year, I mentioned this before, but every year when they call and say, "Hey, how come you haven't been doing as much trading as you used to? Is there anything we can do for you?" I said, "Yeah, you can give me my money back." And they say, "Oh, well, we'll talk to you next year," and that's what it's been like ever since. So.
Right. And that's what it's been like for your experience ever since. But what they've been doing since 2008 has been transferring the risk. The only reason why you've gotten back anything that you've gotten back is because they really don't want people to realize how risky these things are. And that's why it's hard, when I listen to Main Street media and they talk about investors, but of course, you should only sit in this for a day or 2 months. That's a gamble. That's like, in one of my very long, I'm going to break some news that people might not be aware of. But many, many years ago, for a minute or two, I was a dealer in Las Vegas. And I'll tell you what, it feels like Wall Street has become this big casino.
Yeah.
And that big six, I used to hate it when I'd have to deal the big six, because I'd have to spin the wheel and get everybody to come over and put their money down and whatever the odds were and blah, blah, blah. Las Vegas is not built on winners. Maybe you got lucky this time. Maybe you know how to pay attention to the trends. For me, on those rare occasions when I go, because I've had that experience, I do what the house does. Those are my rules. But mostly I know how to bet, which means I know when to walk away. And people, whether it's Las Vegas or it's the casino that says it's a market, people do not know when to walk away. Hey, market's up near new highs, probably will break out from all of the finagling and all of the manipulation to even newer highs. The insiders are getting out in droves. And yet, mom and pop that's got their money in, maybe they're nervous, but we've been trained to think that there's no place else to put our wealth.
That's right.
That there's no other option but stocks or bonds or mutual funds or ETFs or variable annuities or say. That's not true. That's one little snippet of the system, and they don't want you to go anywhere else. Give it to me in my hands, that I can own it outright. And that's really gold and silver are real money that you can hold and own outright. They're not somebody else's contract, which is what all that other garbage is. And that's what it is, because people do not read the contracts. And they certainly don't write them. Wall Street writes them.
That's right.
And they know you're not going to read them.
You made me smile because my wife and I just returned from a trip to Las Vegas where we were able to see a lot of what you just described. We didn't participate in any of that, but it's always eye-opening as you walk through the casinos, just to get in the air conditioning at least, that the motif in which every slot machine and every the decor and everything is gold. Everything is gold, and you walk past these things that are named showers of gold, fountains of gold, leprechauns of gold, lucky gold, everything, and it's like they're appealing over and over to people's intrinsic understanding of what has always been recognized as real value, without actually needing to hand anybody that. And you're right, it's built on losers, not on winners.
Exactly. But you know, it's like it's in our vernacular. The goose that laid the golden egg, good as gold. I mean, we use those, and oh goodness, Bitcoin's always depicted as a gold coin.
It is.
Okay, so yes, when anybody wants, in fact, Megan, can you hand me that from the
Yes.
Okay, I'm going to show you something that I found when I went on a trip, and I think it was 2008. And I was sitting in the airport, and I just needed something mindless because I'd been doing like a lot of work. And so I picked up a People magazine, right? And I don't know if you can see this or not. Can you get it? Is he getting a good shot of that? But this was out of that magazine, and this is an ad from the FDIC, which I just did a piece on recently, and it says insuring deposits up to, and then there's $100,000 gold certificate, okay?
I remember.
And then it says without anyone losing a penny, you know, implying that it's as good as gold.
What they're not telling you is that's actually the ratio at which they're able to cover those bets is about a penny to $100,000. It might not be exactly that, but it's pretty dang close.
Right. I mean, for sure, they're out of money. If there's a run on the banks, which there will be at some point, although I think there will very quickly be a bank holiday. So not a holiday for you or me, mind you, but I you know, if there's a run anywhere in the system, this system will shut down so fast to prevent the escalation of,
Well, actually, we just had Gregory Mannarino on here a couple weeks ago, and we were sharing and discussing with him an official publication that I received from one of our online savings banks, Capital One. And we had already, in anticipation and due to conversations we've had not only with you, but a lot of other people who have given us information over the past couple of years, drawn down to where we only have a minimum amount in that online savings account compared to what we used to have. But the official publication they sent out was talking about, in very positive terms, about you're going to have something new that you haven't had before. You're going to have the protection and the security of these. They don't call them capital controls. They talked about transfer limits. They're going to help protect you. And they said they're going to be starting on August 1st. They started, Capital One officially announced to all of their online depositors that they're going to have the benefit of the security of these transfer limits, and that they were going to be. They said we will establish these on a flexible basis, and we'll do this, under their timing and their amounts, and they'll decide for you when and whether you'll be able to have access to your funds and transfer your funds from there to your own holding. And if they don't say, warning, we're about to clamp down and do a bank holiday whenever and wherever we feel like it, and you have no input into it, and you'll get no advance notice, and you'll have no access to your what you think is your money, which isn't anymore.
Right.
That's not how they put it. They said we're going to give you something you don't have, and it's going to be flexible, and it's for your own good. So
well, governments on Wall Street hire the most brilliant minds for financial psychology. so that they spin things in a way that people can accept it and go, well, I don't understand it, but it must be for my own good because they're telling me that it's for my own good.
Yeah.
I don't know why people trust these people.
Yeah, I guess just like the Patriot Act was for our own good, too, any other loss of liberty that we've been through. Hey,
Exactly.
we'd like to turn our attention to some of the viewers' questions since there are so many. This one is one that's right up your alley. Joe Smith has been listening very closely to you. Says, Lynette suggests buying and holding precious metals among other tangible assets to be used as a store of generational wealth that should survive events like hyperinflation or a currency reset. After such events, and commodities like gold are scarce, does she believe lenders will accept these as collateral for, say, a mortgage on a business property, so you still may be able to eventually pass the gold on after the debts are paid, or will it have to be converted or bartered away to capture notional value at that point? How do we make money and still keep the gold? And
Okay.
so that she said maybe she should make some videos about strategies after the reset, is what they're suggesting. So.
Well, actually, you know, I've been developing that strategy for many, many, many years, and I do share it in snippets. But what he should know is that right now there is a tremendous amount of fiat money inflation that's built into, say, those real estate assets.
Certainly true.
And as we go through the hyperinflation in relation to gold, that gets burned off. So what you'll do right now, where it might take you, you know, I don't know, 100 ounces of gold to pay off that mortgage, during this hyperinflationary event while we go through the reset, it might take you 1/10 of an ounce. And globally, so could you use it as collateral? Well, quite honestly, you know, a lot of governments, India, Turkey, to mention two, have come up with these schemes to get people to turn in their gold, and they get paid interest on them, or they can use it for collateral for this or that or the other thing. But the point is that the gold then goes in the system.
Okay.
Presumably, you can get it back out after it matures or after a certain period of time. But guess what? What happens if they say no?
Mm-hmm.
So, for me personally, understanding how these currency resets and what happens to all of those asset classes during these transitions, you know, globally on average, 25 ounces of gold or the equivalent would buy the entire city block buildings at all. So I wouldn't have a mortgage on it, frankly. I would use a portion of the gold that I have designated for that function and convert it, mostly, unless you're doing it through a corporation. If you're doing it through an individual, they're going to prefer the physical gold for that piece of real estate.
But there you're converting one physical asset for another physical asset.
Correct.
Okay.
Correct. The only time I have any intention, at least at this juncture, of converting my gold or my silver into the fiat money is if I need to pay anything that's governmental or quasi-governmental, like property taxes or any taxable event. So then, yes, you'll convert it, and then you will just go ahead and pay that bill that you can only pay in fiat. At the end of it, I had thought that I would convert a larger chunk of my gold holdings into the new fiat once it had reset and has a component of gold in there to stabilize its value. But since where they really want to take us is completely digital, so we have even less control than we have right now by cash.
Right.
I'm going to continue to hold a lot more of my gold and then convert it into the fiat, whatever the new fiat is, as I need it. Because one thing history has shown us is that you cannot always convert fiat money. I mean, try and buy anything in Venezuela and even Turkey, their inflation is ratcheted up because of what's going on there.
Yeah.
Try and buy anything with the fiat money. You can't always do that. But 100% of the time, you can always convert your gold and your silver into any currency any good or any service. So I don't see myself using it to take on debt. I see myself converting it directly into an income producing asset, a real asset that I can hold and own outright.
This is a related question. Actually, you may have just answered this one, but let's just make sure. This is Filed Share asking, will we be buying assets with hyperinflated dollars or the new currency? Which is the better time to convert metals to assets, during the hyperinflation or once the new currency is issued?
Well, history would tell us that there's this window, because there is hyperinflation and then there is official reset. So what I'm going to be looking for more than the date is I'm going to be looking at when the smart money, when those that really understand what's happening begin to accumulate, and we will see on a graph what's called a cup formation that normally occurs while we're inside of the hyperinflationary event. Okay, because particularly with mortgages, and we're going to get a chance to see, because Venezuela did an official reset. I think I was on your show right after that happened, and we talked about it on February 7th. And globally, on average, about 9 months afterwards, so we'll know in November, I think, then they reset the mortgages. Okay, so we'll see what happens. But you'll get a letter, and you'll either have the ability or the opportunity, I should say, to pay off that mortgage in the old number of, in this country, dollars. And most people will not have the ability to do that, nor will they have the ability to pay the reset payments. Forget the principal, but just even make those payments. So in Japan, as an example, because this is what I think it's going to look like, when that happened, in terms of the yen, the value of their real estate, residential dropped 85% and commercial dropped 95%. So now you have the gold that's being reset up, and it's much higher than this now, but even the official reset was over 2,600 times in Venezuela. So this goes up 2,600 times as this is crashing down. And that's why I said, what might take 10 or 20 or 100 ounces right now to buy, because it's so suppressed, during that period, you might only need one.
So there's two closely related questions to this as well. Zen Cool asks, and I think is on the kind of the flip side, because we're talking about things you owe versus things that are owed to you. What will happen to my life insurance policy, especially on my assumed sum while in force, after the global monetary reset? Is it hyperinflated away for which I paid in vain during these times?
Pretty much. Yeah.
Because you've talked about how mortgages get adjusted. Would insurance get adjusted eventually on the opposite side? Let's pretend you're carrying $1 million life insurance policy.
Typically not to your benefit.
Okay. All right.
Okay. And even if it was, let's say it was, that could happen. 1 trillion times 0 is still 0. So as long as what they're going to give you is fiat, it becomes not relevant. Having said that, personally, I don't have any fancy schmancy policies, but I do have a basic life insurance policy that I will maintain in force to make sure that if something happens to me before that occurrence, that my children can, maybe pay something off or, bury me or whatever it is. But I only have a certain amount. Now that's not really adjustable, right? So you take out the amount based on how much you feel that you need, and you just pay on that policy until. But I won't maintain the policy once hyperinflation hits. But right now I do have life insurance, and frankly, I do maintain it.
All right. And this one,
function.
this is, we talked about owning real property. Faye Boyer asks, how will homeowners with no mortgage, so if they own their property outright, be able to pay their property taxes when the dollar will have no value? Please explain in the most simple terms.
So for that, I like the fractional gold coins. I personally like the old foreign ones, like a Swiss franc that's about a fifth of an ounce, or a sovereign, British sovereign, that's a quarter of an ounce. So what you would do is you would convert that fifth or quarter of an ounce of gold into the fiat to pay those property taxes, because property taxes erupt. They explode upward. And when we stop and think about it, since by a very wide margin, pretty much all of the pensions and medical costs borne by the cities and the states are actually borne by the taxpayers and are part of your property taxes, they're going through the roof. If you don't have the money to pay the property taxes, you will lose your property. So to do that, I mean, if you give us a call, we have everything is set up in formulas based upon what historically you would need and where the current fundamental value is. Interestingly enough, if you look at Illinois, who their property taxes have gone up the fastest and the most of, I could be wrong about this, but when I did this a few years ago, they went up the most of any state. And when I was kind of curious, so I took spot gold, which of course we know is not real, but anyway, it's real enough for this experiment. And based upon when they started the rapid rise in property taxes until the date that I did that, if they had bought gold back here when property taxes and the price of gold was at this level, and they had to pay their property taxes here when property taxes had tripled,
yes,
so had the gold. The gold maintained its value. So in reality, they had the money to pay the higher property taxes because they locked in their value, the purchasing power, back here. And that's what I suggest you do to maintain your property.
The next
and
question.
We're happy to help you with that.
Yeah, sure. The next question, it's interesting because we do not give, this is not a official financial advice channel. We give awareness and education so people can make more informed choices. It's also not a marriage counseling channel, so we can, in that disclaimer as well. But I think that the question hits at the heart of couples who are dealing with, they're trying to find their way. It's hard enough for an individual to find their way through the morass of misinformation and hidden information, suppressed information, to try to find, as you said,
yes,
we're not told about this stuff. We're told that only this part of the story and not the whole story. But it's challenging in a couple when different people have different takes on that, and so you can come to this, get on the same page. Sally Herbert said, we have all our money in annuities. My husband says he will not lose the 10% to take it out. I want to attach it to gold. What should we do in our shoes? So the point isn't telling them, here's how, we're not going to give them financial advice, but
right,
when a couple are not on the same page, what are some things that they need to consider and look at to try to reach getting onto the same page?
Well, number one, I have to say this disclaimer. I have not been married in 33 years. So I don't personally have that experience. However,
you work with people who come to you and have that problem.
Yes. But I just want to say I think that if a husband and wife that disagree on this could at least respect each other's feelings on it. So if you're going to hold everything in an annuity, then I would say make sure you have the right amount of gold to protect whatever you're holding in the annuity. That's called proper diversification. And, part of it does come down to, well, I don't believe it and I believe it. So I think that, a mutual respect so that you can come together. But whatever you're going to hold in the system, it's like a what if I'm right and what if I'm wrong?
That's right.
Okay. You can't just base it what if I'm right, because you might be, but you might not be. So that goes to properly diversify your portfolio. So whoever's right protects the other.
This may be related.
That's what I would recommend.
Without Excuse 2011 says the rule of law clearly does not exist nowadays, as the criminals are fully entrenched in the top spots of all areas, legal, financial, political, etc. Therefore, those criminals can keep gold and silver prices suppressed for a very long time, much longer than 7 years and counting. My question is simple and logical. Why would anyone put their money into gold and silver, given that they may never be able to recover what they put into precious metals without a huge loss?
Well, okay, there's a few different ways that I can answer that. Number one, while that is accurate, that they've had the opportunity and certainly taken advantage of it to be manipulating the price, and guess what? A whole lot longer than 7 years.
Yeah.
They've been really doing that since they started on this scheme, and probably even before that. So they can keep doing it as long as it serves their purpose. Part of why I know that it will not continue forever, though, is because this whole game, this whole Ponzi scheme is too fragile. That cannot continue forever. The constantly never-ending debt and inflation, we're already at zero value in the currency. It's just that we continue to accept it as a tool of barter. But officially, it essentially has no value. So they must. And if you listen to them, they admit that they have to reset the entire financial system. Okay, well, how do you do that? It's not random. They've done it over 4,800 times, and they do it by revaluing the fiat against gold. So at some point, they want gold to go to its fundamental value. They don't want you owning it when that happens.
Yeah, we just had Ted Butler on from Butler Research, and he was talking about, he said, for the first time in history, J.P. Morgan is more positioned now than they ever have been in history to be on the quote-unquote the right side, or the long, to benefit from an upswing in precious metal prices, which they definitively were not in 1980 or in 2011. So that was pretty interesting, that when the really big players get on the side where it's to their interest, then the game can change dramatically. And without, yeah, you're right. They're not. They want to be the ones on the beneficial side of the trade there.
Absolutely. You know, I have to say, I'm like so grateful to my daddy, because he always said, do what I say and not what I do. And I always used to say, that just doesn't make sense to me. And that was great training, because I listen to what they say, but I watch what they do. And when their actions do not match their words, then guess what we know? And their central banks are buying gold hand over fist.
Yeah, and you've talked about, in the
why?
past, you've talked about insiders, some of the largest stockholders in some of the big companies divesting themselves and that sort of thing. And yeah, you say follow the money. Yeah.
Right. It's not just some. It's massive amounts. I mean, I've been following this pattern shift since almost a year ago, last October. It ratcheted up significantly in January.
That's right.
Just before the market started going cattywampus. Yep. I don't think that's a coincidence. And since June 8th, there's been an additional heavy-duty pattern shift of insiders selling out of stocks. If everything's so hunky-dory, why are they selling out? Because they're taking their chips off the table. And these are the guys that are running the corporations that know what's going on.
We have a question about the dollar and what may happen as you go through these various stages of the foothills of the collapse. Ryan O'Connell asks, it seems like other countries have worse debt than the U.S. Will people run to the dollar initially during the next crisis?
Isn't that what's already happening? At the same time, so visually we hear that the dollar is getting so strong against the Turkish lira, against this, against, all of these emerging market currencies, but that's relative, fiat against fiat. In terms of value, in terms of purchasing power, it continues its downward decline. So this strong dollar myth, we're kind of seeing it now, but on the other side of that, what creates dollars is government debt, the treasuries. And we're actually seeing, and we've been seeing, foreign governments selling their treasuries. And in 2002, that was the first time, December 2002 was the first time that the Federal Reserve actually bought treasuries from the government. That's what a third world nation does when there are not enough buyers of government debt. So that could be seen as the early start of a run against the dollar. And in the 60s, there was a huge run against the dollar as governments sent in dollars and converted them into gold, pulling the gold out of the system.
Culminating in
what you're looking at.
Yeah, culminating in Nixon's announcement in 1971 of saying you can't do that anymore. We're not going to give you any more gold for your dollars.
Right, and handing over full power of inflation to private central banks. You know, I mean, that's really what the big deal was about them. He handed over our lives and what we work for, what we try and save, to guys that want it all.
Following up on your principle of follow the money and watch what they do more than what they say, this one's a little bit provocative. CC Ryder says, if China and Russia have the sense to buy tons of gold in anticipation of the coming crisis, how could not the USA or the UK, who must be in possession of the same information? Is this not a big hole in your argument?
Well, actually, if you think that any central bank is giving us the absolute truth on the choices that they are making, I think you probably need to think again. Mm-hmm. This is official, but where is the power heading as well? The IMF intends on having an office in Beijing within the next few years because that's where the power is headed. It's not staying in the US, it's headed toward China. So China's accumulating gold, and since I think 2006, I could be off on that date, but I think since 2006, they've been encouraging their population to start to accumulate gold. Why? Because in this next crisis, who has the savings is going to come out on top. So for one thing, I don't think since the amount of gold that we supposedly hold in deep storage has not changed even a 16th of an ounce since I'm pretty sure that was 1952. I could be off a little bit, but something like that. I don't think we really know how much gold the U.S. has or does not have, nor do I think we ever will really know since it's not been audited. So that's number one. But number two, no, that does not make a hole in the argument because Great Britain basically lost their keen status when we took over as the world reserve currency because of all of the debts. And I went to school in England for a semester. So, I mean, don't get me wrong. I love London. I love England. I was up in the Cotswolds, wonderful country, marvelous, marvelous people. But I don't really appreciate the fact that they exported their central banks to us. That I don't think was a very good thing.
We had the quote from about 10 years ago, at least, from Warren Buffett, the Oracle of Omaha, saying that the 19th century belonged to the British, the 20th century belonged to America, and the 21st century belongs to China. Invest accordingly. So it does seem to be a grand play playing out on a massive scale there. You've already touched on this before, but I think there's a lot of interest on this particular question, so we're going to ask this one. Voodoo says the current value of the real estate market is around $250 trillion. The market value on precious metals is only $3.1 trillion. Combining these facts with the total world debt of nations and the markets being so tightly intertwined, will it be possible to buy real estate with precious metals after the market reevaluation? If so, how do you see the values of gold and then silver reciprocating into the value of real estate?
Well, like I said, in the studies, historically, on average, 25 ounces of gold or the equivalent would buy an entire city block, buildings and all. And a lot of the reason for this is because gold is used across there's always demand. It's used across every single avenue of the global economy. So wherever you go, anywhere in the world, it has value in one capacity or another capacity. So that's one of the reasons why it's the primary currency metal and they do the reset. So yes, I intend to. That's part of the strategy, because history tells us, yeah, we'll be able to convert our gold into income, real assets that produce income.
You've talked to us a couple of times in the past about the services that you provide there at ITM Trading of coaching people on options that may be available to them they may not be aware of in terms of physical ownership of precious metals, in particular classes of precious metals that may appreciate better than others. A lot of that talks is strategies that are built around being able to be in communication and in relationship and in conversation with those people that come to you. This is a rather dark question, but we'll lay it out there just because I think a lot of people are concerned. Twyla Fetis says, what should we do in case of an EMP attack without being able to contact your company for guidance? Will we be on our own to barter with a Mad Max world out there?
Actually, we anticipated that. So when you're working with us, our mission is to put you in the best position possible, but not to leave you on your own until ultimately you know how to fish, right? So a lot of the videos that I do is to teach you how to recognize these things. But once we establish whatever your personal strategy is based upon your goals and your circumstances, etc., you actually end up with a little booklet based upon your personal portfolio that gives you, when to sell, who to sell it to, how to utilize it, and also the formulas to know if any income producing asset is overvalued, fairly valued, or undervalued. And it's not, so our intention is to be here all the way through, but if something like that should happen, we don't want you to guess. Everything is color coordinated or color coded, I should say. I don't know how coordinated it is, but the colors are laid out there, and we help you to mark these different kinds of gold and silver that you have, so that bam, at a glance, you can look at the cover of your book and you can look at your metals and you know what to do with them, where to do it, how to do it, the whole 9 yards. So hopefully that doesn't happen, but if it does, we have you covered for sure.
Well, Lynette, you've been generous in staying with us for 3/4 of an hour here and fielding quite a few viewer questions. We've got so many more than we have time to offer. However, if people do want to perhaps send you a question, is there a way that you can be reached separate from this broadcast? If they want to reach out to you, how can they get a hold of you?
Well, Megan actually manages all the social media. So we're on Facebook and Twitter. They can also send in a request to services@itmtrading.com. We love questions. So we do Q&As all the time. But yeah, we're here to be of service, and we're easy to reach. You can even leave, if you go and look at one of the videos and you have a question, you can leave it there. I know that there are a number of people here, not me, but there are a number of people here that scan those specifically looking for the questions. But if you put a question on Twitter, Megan bugs me. So you'll get your answer.
So today is Tuesday, August 14th, 2018. We've been talking with Lynette Zang. She is the Chief Market Analyst at ITM Trading and a frequent commentator here on Reluctant Preppers. Lynette, we didn't give you a chance to give us an update on your floating gardens in your backyard, but you've continued to amaze us in the past of not only your koi, I believe it is, or is it tilapia you've got in there?
Oh, I have, I have tilapia in a different pond because they're a bit aggressive.
Okay.
But I have black mollies in there now and kissing gouramis, and I swim with them every morning.
Gouramis can get really big.
They should all get really big. And you should see my sharks. I have those high fin sharks, which are algae eaters, not people eaters.
Is that
And they're
Placasimus?
probably about this big right now.
Cool.
They're gorgeous. They're so gorgeous. So yeah, my floating islands, I had my salad today, so I had some Egyptian spinach from the gardens that are growing, from my pond water. Had some of that in there today. It's a phenomenal thing. All my new babies, not the ducks yet, but all my baby chickens have now started to produce the eggs. So I have chicken and quail eggs.
Wonderful.
And I'll take a picture when the ducks do, because they're Cayuga ducks, which means they're all black.
Oh,
and
yeah.
their eggs are supposed to be black.
Oh, wow. Oh, I'd love to see that when that happens. Did I tell you the quail egg story about my granddaughter?
No.
Our daughter, who also lived in Arizona, raised backyard chickens and quails, and always wanted to give all of our grandkids chores. So one of our granddaughter's chores was to gather the eggs in the morning. And so at her kindergarten, she was asked by all the kids were asked by their teacher, what did you have for breakfast today? Because they're kind of concerned about kids being, no kids left behind kind of thing. And she said, well, I had quail eggs. And the teacher said, really? She said, yes, my mother sends me out in the morning to gather quail eggs. And that day when my daughter drove up to pick up my granddaughter after class, the teacher quietly said to her, if you can't afford to feed your daughter, we do have school lunch programs here, breakfast programs. My daughter said, what are you talking about? She said, well, she mentioned that you send her out to gather wild quail eggs in the morning. She says, no, we have them as backyard, we grow them in our backyard, and I believe in responsible children should have chores. So it's kind of a humorous anecdote there about backyard poultry farming, but it's really urban poultry farming is really becoming very popular, and we're always glad for your updates there, and a lot of our viewers are doing that as well.
Oh boy, and I'll tell you, this right now is the season of the jujube. And have you had jujubes?
No.
They're about that big, and they're kind of like a little bit of an apple. But what I like about them, first of all, each one has 75% of all the vitamin C that you need in a day.
Okay.
So I typically eat 2 of them every day.
Okay.
But you can eat them when they're still kind of raw-ish or young, and they're sort of like an apple-ish kind of.
Okay.
But then as they mature and they get all brown, they're kind of like a date. So they get sweeter.
Okay.
And then you can hold them. So yeah, I have a lot of superfoods. I do a lot of things to keep my brain functioning and my body functioning at an optimal level. Swimming with the fish definitely helps me mentally, emotionally.
It sounds exciting and relaxing at the same time. So
it's the coolest thing ever. But being able to pick the food that I eat, which I would say I'm probably easily at 90%.
Wow.
Of the food that I eat.
That's so helpful to get those fresh. The nutrients are so present in freshly picked things that are still just live off the tree. That's awesome.
Yeah.
Or just butchered in the case of some of these chickens might end up that way, depending how you do. If you're just harvesting eggs, sorry if I went too far on that. But thank you.
You didn't. I just. I mean.
Are the tilapia ever going to end up?
I love them.
Are the tilapia pets as well, or are they going to end up in a skillet someday?
I don't know.
You haven't decided yet?
I don't know. I haven't decided yet. I mean, it's really hard because, I throw the food in. We kind of have a relationship. They see me coming. They get, especially in the big pond, because I don't have a lot of green on the top, just the islands and some lily pads. Whereas in the tilapia pond, I have a lot of water lettuce and different things. But, so they see me coming and they kind of gather.
Oh, yeah.
They're like dogs.
They're
and
smart,
then when you throw food in there, they're like piranha.
Yes, that's right. That's right.
So I don't know. I can't answer that.
Hopefully it won't be a major crisis that forces your decision in that area. Hopefully it'll be something you can make at your leisure. So we're going to have to...
If it was a function, I'm going to let you go, but I mean, if it was a function of, of feeding someone, I mean, honestly, I think I'll probably be able to feed about maybe 100 people by the time all my fruit and nut trees come in and everything like that. So the function of the farm is food,
Well,
and my intention is to feed as many people as I can.
It's an inspiring story that you continue to share with us, and we appreciate every chapter of it each time we meet with you. So we'll talk to you again.
I'm having a ball with it. I really am.
So again, guys, we've been talking with Lynette Zang, the Chief Market Analyst at ITM Trading. Lynette, as always, thank you for joining us here on Reluctant Preppers.
And as always, it is a pleasure, and I look forward to seeing you the next time. And give us a call. I have this whole team of people that are brilliant and on a mission, and we all love questions. We all love questions.
Very good. Thank you so much.
My pleasure. Bye.